Good evening, and welcome to our panel sponsored by Dayenu, Fossil Freedom, Greening Endowments and Investments. My name is Rabbi Rachel Contraster, and I'm the Executive Vice President of the Interfaith Center on Corporate Responsibility, ICCR. ICCR is made up of shareholders who are guided by both faith and values, committed to action, calling on the world's most powerful companies to address their impacts on people and planet. And my 300 member organizations, who are global institutional investors, are committed to moving the current business focus away from short-term returns and towards sustainable strategies that advance the common good. So as you can imagine, one of our major areas of engagement with companies is in confronting the climate crisis. That's why it's been so inspiring to me to watch over time as more and more Jewish communities across the country are stepping up to confront the climate crisis. We're greening our institutions and synagogues, we're engaging in political advocacy to pass climate legislation, and we're joining multi-faith efforts to stop the fossil fuel industry from burning up the planet. But even the most meaningful climate laws, such as the Build Back Better Act, which, if it passed, would invest more than $500 billion in sustainable energy and transportation and clean up communities impacted by pollution, these laws are not enough to get back into the climate safety zone, to keep global warming below the 1.5 degrees that the world leaders agreed to at the Paris climate talks a few years ago. The math just doesn't add up. We have to stop drilling and mining and burning fossil fuels. We need to keep 80% of them in the ground if we are to avoid climate catastrophe. Federal investments in local greening efforts aren't enough to stop the major fossil fuel companies from drilling and burning fossil fuels for profit. As we know, just 100 fossil fuel companies are responsible for 3/4 of the world's emissions, with business models that are based on continuing to extract these fuels. Given the moral urgency, the Jewish community has an opportunity to address this unfolding disaster by leveraging the more than $26 billion in Jewish philanthropic assets to make an impact and help keep fossil fuels underground and declare fossil freedom. Aligning investments with Jewish values isn't new, but when we look at the climate crisis, which is the existential crisis of our time for everyone, there's a misalignment between the ways that Jewish communities are stepping up to take action and the fact that we aren't seeing it widely adopted into communal investment strategies yet. Today, I'm really excited to speak with 3 experts about why and how Jewish and faith institutions can green their endowments and investments and make significant impact to cut emissions while we still can. So I'd like to introduce the other panelists on our call. Beth Sruel is the President and Chief Executive Officer, Miriam and Jerome Katzen, Presidential Chair of the Jewish Community Foundation in San Diego. During her tenure, the foundation has granted approximately $350 million into the community. Assets under management have doubled to over $650 million. And Amanda Joseph, who is the Director of Faith-Based Initiatives at Calvert Impact Capital, serving as a resource for faith investors on their impact investing journeys. She partners with faith leaders, institutions, and networks to build the capacity and community of practicing faith-based impact investors. And finally, Jeff Perkins, who is the Executive Director of Friends Fiduciary, which is the Quaker nonprofit that manages investments for 425 Quaker faith communities and organizations around the country. They manage $700 million in assets and are based in Philadelphia. I'm really excited for our conversation today. But first, I want to take a moment to take a step back and give some additional framing. As we know, the climate crisis is one of the most urgent moral issues of our time. We as the Jewish community do speak out about the climate crisis. Our rabbis give sermons, we take action, we take to the streets, we hold our political leaders accountable. But we've largely, as a community, been absent from conversations around using our financial leverage, our financial power as individuals or institutions to create a more sustainable planet. It's important to remember that while the Jewish community is known for being philanthropic, we do so much good with our tzedakah. We are behind the curve on using our money in other ways for change. We don't do tzedek, justice, with our money as much. And this is really critical for us to do if we want to create systemic change and do so quickly. Other faith communities, their pension funds and institutional endowments have a longer track record of impact investments, shareholder advocacy, and sometimes removing from their portfolios companies that don't align with their values or screening them out to begin with. We can speculate as to why it is that the Jewish community has not done this, but practically it means that we are both leaving power on the table. With so much money in communal assets and family foundations, we have a voice that we could be using to advocate to save our planet and to protect human rights. And it means that we're failing on a moment of alignment of our values. We give money away, without always looking carefully about where are we investing that money, to see that sometimes our investments are undermining the better world that we are trying to create with our tzedakah. If we look at how we can use our money to make change, you can think of sort of three buckets of strategies. There's where we positively invest our money, where we invest in companies that are doing better. We can screen out companies that don't align with our values. And then we can use our investments to engage with the companies that we do hold to encourage them to make real change in their business practices. And there's an inherent tension between the last two of these strategies. Do we screen out companies or remove our money from them when they aren't doing what we need them to do? Or do we continue to hold onto our shares with them in order to engage them to improve their business practices? The U.S. Council on Catholic Bishops, for example, just released a revised set of guidelines around socially responsible investing that grapples with all of these issues. Do we engage or do we divest? The other panelists are going to speak about some of these strategies, where we can invest for impact and how do we support positive corporate change, and how we remove our investments from companies that don't align with our communal values. But I'd also like to speak briefly about shareholder engagement, when investors engage in dialogue and file shareholder resolutions with corporations as advocates. Faith-based investors like the Jewish community can speak not just to the business case for incorporating more sustainable strategies into their practices, but also the moral case. My organization, ICCR, is over 50 years old. We were founded in 1971 to fight apartheid. While ICCR members never shy away from making the moral case for action, our fundamental proposition is that as investors, responsible and sustainable business practices and a strong corporate culture of ethics are in the long-term interests of both companies and investors. And at ICCR, we've been trying to protect our environment since the beginning. If we look back at 1971, one of our resolutions that year, filed by the Episcopal Church, was to a metal company to ask them about their environmental impacts. And one of our members filed one of the first shareholder resolutions that referenced planetary or global warming in 1989 to General Electric. So it's already been a long time that faith-based investors have been urging companies that the longer we wait to control greenhouse gas emissions, the more difficult and expensive our task will be. And it's clear that we can't wait any longer. 1989 is more than 3 decades ago. The faith and values-based investors that are part of ICCR seek to move companies in key industries to reduce their contributions to greenhouse gas emissions that are responsible for climate change. And we do this by pressing companies for a phasing out of fossil fuels and a phasing in of low-carbon, renewable energy sources. ICCR members are also working at the nexus of policy and investment. It will come as no surprise to anyone on this call that companies that hold enormous influence over policymakers. Given the worsening climate crisis and associated risks, faith and values-based investors are pushing companies to align their climate actions and policies with the objectives of the Paris Climate Accord, which says that we have to hold global warming to 1.5 degrees, and to ask those companies to disclose their lobbying activities, because often companies say one thing and lobby politicians for another, sometimes themselves and sometimes through their trade associations. I think many of us are familiar with the term greenwashing, where companies express positive thoughts on Earth Day or release sustainable products, and then continue to engage in practices that are destructive to the planet. And one of the ways that happens through corporate lobbying, and those of us who care about our planet can use our assets to call them out. We've launched a focused campaign to assist investors in engaging companies on the alignment of their corporate climate lobbying, including through their trade associations, with a goal of net zero emissions. And that's something Jewish institutions should be part of. While we've long called for disclosures of corporate lobbying activities, who they lobby, about what, and how much they are spending, our campaign on Paris-aligned climate lobbying is proactive. It goes much further by pressing corporations to proactively lobby in favor of policies protective of our planet and our climate. And we have to think about the climate crisis with every company we talk with, not just fossil fuel companies. Every company has an impact on our planet, as they or their suppliers extract raw materials, produce goods, and transport them around the globe until they reach us as consumers. For example, many fashion companies have begun to adopt science-based targets on emissions, but they're actually making little to no progress on figuring out how to reach net zero. And many of them are not addressing scope 3 emissions, which are the emissions that are not part of the assets a company owns, but might be part of its value chain. For example, a subcontracted factory. Or as investors, we can engage with the banks or other financial institutions that underwrite fossil fuel companies. The fact is that all companies need to align their activities with the goal of reducing carbon emissions. And that provides us with an opportunity to engage with them continuously about their impact on the planet. And that's true even if we remove the worst actors, the fossil fuel companies, from our portfolios. This ongoing commitment to advocating with the companies we hold is part of the ongoing work of greening our endowments and investments. This work of tzedek, this work of justice, of using our money for justice, never ceases. As Rabbi Tarfon said, the day is short and the work is great. As Jewish advocates and institutions committed to confronting the climate crisis, we know that the best way to overcome our despair is to work together with those who share our values. We already know that's true on a local level and when we join together with other people of faith to advocate for better policies, like the tremendous activism around Build Back Better. But this can be true when we do the work of justice through our financial assets as well. I invite the Jewish community to be part of our work at ICCR. Our powers community can only be magnified through being parts of similar coalitions of institutions motivated to confront the climate catastrophe. That's also why I'm excited to hear from the other panelists about the strategies that they are spearheading that will enable faith and Jewish investors to align their investments with their core values. This is a conversation that the Jewish community has needed to have for a long time. So with that, I'm going to turn our conversation over to Beth Srull. First of all, to give us an overview of how Jewish community endowments and investments work, and to talk about the work she's doing in San Diego.
Hi, everyone. So great to be with you. So as Rachel said, I'm the CEO of the Jewish Community Foundation in San Diego. We're obviously a community foundation. That is very different from other Jewish institutions that are managing pension funds or private foundations. So I'm going to give kind of an overview, but I want to share a little bit about what some of those differences are, because the ultimate investment strategy will be the same, but how we advocate and move for change can be very different because the objectives are different. So as a community foundation, we manage now a little over $700 million in philanthropic assets. Those are the donor advised funds of just under 1,000 individuals and families, plus some endowments and custodial funds for nonprofit organizations in San Diego County. That's very different. So because of that, I have to pay attention to what 1,000 people think about how their funds should be invested. That's very different than a private foundation or a pension fund. You know, a pension fund, their objective is to pay the pension, that they have to provide to the pensioners, because we certainly don't want to see elderly people who need their pension, not getting it. So the demands are a little different and the influencers are a little different, but we all, for the most part, have a structure. We have investment committees. We have outside managers and consultants that help us. And then we have underlying, fund managers. And in a diversified portfolio, we have a lot of underlying investment managers. But before I dig into that, I want to make a quick note about that it isn't just that we want to advocate with our with the asset owners, with our synagogues and with our federations and so forth. There is a regulatory framework that comes into play here. So this isn't just like what Beth Searle and her husband want to do with their money and that we can just go invest how we want. The managers of institutional dollars have a fiduciary duty to invest according to certain, largely from the Securities and Exchanges Commission, about what's considered appropriate and prudent and things like that. And some of those rules were sort of opened up and made it easier to deal with, to include environmental, social, and governance issues in investment decisions in the Obama administration. They were tightened in the Trump administration. They're being loosened in the Biden administration, but we could make some regulatory changes that would make it much easier for us to advocate with our institutions, and for those institutions to then take action and not be able to fall back on this, regulation says I can't. And so I just, I think that is something to think about when we think about advocacy and moving forward as institutions with our money, as well as with our lobbying and our other efforts. So as an institution that manages philanthropic dollars for lots of people and organizations, we spend a lot of time educating our donors around both the benefits and the hows and whys of moving their money to be consistent with their values, with Jewish values. And we take really seriously that, we would never hold an investment committee meeting on Shabbat. We would never serve non-kosher food to our committee members. And we should therefore be paying attention to Jewish values, in other areas. And I will say that I, as part of my job, I go to investment committee meetings for synagogues and, assorted other organizations. And it is always interesting to me, back when we had them in person, that you would see at the synagogue, the kids are in Hebrew school, and the parents are, while their kids are in Hebrew school, they're bagging, food for the poor, et cetera, et cetera, et cetera. And all these Jewish values are being lived up to and sung and celebrated. And then the minute you walk into the investment committee meeting, it's only about making money, and Jewish values are sort of left outside. And that's really what we're trying to change here. So just for some background, generally speaking, institutional investors like endowments and foundations, we're what's called a universal owner. That because we manage large amounts of assets, we own a slice of the market. So we own some of everything, so that we have a really diversified portfolio, which enables us, generally speaking, to have to meet our return expectations and minimize risk and volatility, because we don't want to see ups and downs. So we're looking for that market rate of return, but we're also looking to manage our risk and volatility. And part of how you do that is that broad diversification in the public equities, in private debt, et cetera, et cetera. And so we hold assets across the entire spectrum, and the strategies around environmental, social, and governance issues, we would call them ESG. The strategies do differ across asset classes. And most of what we'll talk about today is about what happens in the public equities market, where you're owning the stock in everything from Google and Facebook and the issues that they have, to a Chevron or an Exxon and the fossil fuel providers. The Forum on Sustainable and Responsible Investing, they do a study every year, and they say that 1 in every 3 professionally managed dollars is in some kind of environmental, social governance structure or vehicle. And I think one of the things we really want to get into is there's no definition of what exactly that means. So any fund manager can say, I have an ESG strategy, and that strategy can be total marketing, or it can be really meaningful. And it can be really hard to distinguish between the two. So in our case, our manager, Mercer, our investment consultant, they work with our investment committee, and they grade every potential manager that we might select to manage money on environmental, social, and governance issues. But what they do is they're assessing the processes that those fund managers use to decide where to invest and whether it incorporates looking at ESG or not. And then within the asset diversification that we need, we're choosing the better or the people with the managers with the better processes. And there is a leap of faith that says that if an investment manager has a really good process, that it will produce better environmental results. But there isn't any real assessment of the impact. The managers are not judged on their environmental impact historically, or and a year from now, we don't have a way to look back on really what happened. So the impact measurement makes it really hard, or the lack of impact measurement makes it really hard to hold feet to the fire, but we try. And then, as Rachel said, other strategies you can screen out, fossil fuels, say. And I will say that Jewish Community Foundation, we do not screen out anything. We don't we don't really think that screening out fossil fuel companies or whatever would be particularly impactful on the environment, and it would be hurtful to our investment returns. And the reason for that, two reasons. Unless every investor, every bank, and every insurance company decides that they're not going to provide capital to a fossil fuel company, you're not going to be able to squeeze those companies out of business or really make them change what they do, because if we take them out of our portfolio, somebody else will put them in theirs. And so we think that the much more impactful way to do this is around shareholder engagement. And we do have funds in what's called the Jewish Advocacy Strategy at the JLens Investor Network. And the Jewish Advocacy Strategy it's a sub-manager. They manage some of our funds, and they orchestrate all our shareholder advocacy, both for environmental, social, governance, etc. And we have had some successes. And I think that many of you have read in the paper that recently that there was a hedge fund manager, Engine Number One, it's called. They owned 0.02% of Exxon. And they used that ownership to file, to nominate board directors. And they were able to convince a BlackRock and a Vanguard and State Street and the major asset holders to join them with their 0.02%. And they won 3 new seats of people on the Exxon board who are pushing for environmental reform. So we really advocate on that. And I know I am down to like a minute here. Just on the private equity side, I'll just say, most institutions are investing in private equity in order to meet the returns that they need to pay the pensions, et cetera. And you can take more direct, you can have more direct impact in the private markets because you are investing directly in privately held companies. Often you are taking, the fund managers taking a board seat and the like. So as an example, we made an investment in something called SJF Ventures. Stands for the Sustainable Jobs Fund. And they are a private equity fund that is investing directly in businesses with products and services that are greening the economy. And so, that's a whole different sort of asset class where we can have a greater impact. And I think I'm going to leave it there. I'm just going to say that my call to you is to get on the case of your local Jewish institutions to be looking at this. There are ways that you can take steps, slow but sure. And as a group of Jewish investors, we can make a difference. And with that, Rachel, I will turn it back to you. I don't know how over my time are. I am sorry.
Thanks, Beth. I really appreciated hearing your remarks and for the way that you laid out the different strategies that your foundation is undertaking. And I think that's a really great segue to Amanda to speak about the different ways that Calvert is using impact investments to create a more sustainable economy.
Great. Thank you, Rachel, and thank you, Beth, and Jeff, and also Diana for bringing us together. I'm thrilled to be here because this is a conversation, I think, as Rachel noted, that is long overdue in our community. I've been in and around the field of community development finance and philanthropy and Jewish community for a couple of decades, and our time has come. A lot of work has gone on over the years to, I think, get us to this moment. So in some ways, it's a Shehechianu moment for me. But what I'm going to talk about is impact investing, what that is and how that can be a part of your portfolio as you're thinking about greening your investments. But just maybe quickly a bit of background. The role that I'm in right now is with Calvert Impact Capital. We're a national US-based nonprofit impact investing firm. We've been doing this work for more than a quarter of a century. And we like to say we make markets work for people and planet. So I'll be describing a little bit about some of what the investments we've made to give you some color about what this is all about. But some years ago, in a century far, far away, I was part of an initiative with a Shefa Fund, Jewish Funds for Justice, to try to get the Jewish community to do what we're talking about today, to invest our dollars in local US-based community development finance. We had some successes. We helped move some tens of millions of dollars. But this community, as we know, and Rachel gave us some numbers, can do so much more. So welcome, everybody. And I'll jump in and hopefully use my time effectively. What I want to do is give you a brief definition of what impact investing is, some examples of what we're talking about, particularly in relation to climate and environment, share a little bit about what some other faith communities are doing because they've been leaders, and was really glad that Jeff will speak after me about what they're doing in the Quaker community. Share some exciting updates of that work that's going on in this community, and I hope some of you all are on the phone because there's real progress being made right here that we can pick up with. And then share some resources that will end up in the chat that will be helpful to you on your journey. But what is impact investing? Yeah, we're all sitting here in different roles with regard to the organizations we're either working for, managing money for, on the boards of, volunteering with. But we have an abundance of resources before us, whether you're a small organization or a quite large one. We have an abundance of resources that we're stewards of and we have to take responsibility for. And how we use our values to do that, particularly in light of the climate crisis, racial justice moment we're in, and crisis, economic crisis, you name it. These are, the way that you move your money is a great way to really add to solutions. So I'll start with some Jewish text also. From a vote to Rabbi Natan, chapter 41. May blessing come to the one who provides relief. Better is the one who makes loans, but the one who provides a share for the poor and holds a stake in their success transcends them both. That's what impact investing is. It's really taking a stake in the success of somebody else, a community who could really benefit from that partnership. But there's actually a really specific definition of what impact investing is from the Global Impact Investing Network, aka the GIN. Impact investments are investments made with the intention to generate positive, measurable social and environmental impact alongside of financial return. These can be made in developed markets and emerging markets across asset classes, targeting a range of returns from market rate. Sometimes we call those finance first impact investors to concessionary or below market rate, which are impact first impact investors, all depending on what your strategic goals are as an investor and as an organization. This, again, impact investing is about solutions, using capital to solve the world's most pressing problems. For those of you familiar with the UN Sustainable Development Goals, the 17 goals that certainly this climate work fits into, which is goal number 7, impact investing is a way to address those goals as well. So we're talking about renewable energy and conservation and microfinance, affordable housing, small businesses, jobs, healthcare, education, but investment opportunities that are really going to bring about change in these areas. What do we mean by measurement? We can measure how many jobs are created, how many businesses are sustained, how many units of affordable housing or childcare slots are being created by the financing, by these investments. And really in the case of climate and resilience, how many metric tons of CO2 have been reduced? How many megawatt hours of clean energy generated by solar, wind, and other renewables? The kilowatt hours of energy conserved, the number of renewable energy products financed, number of acres of land that's managed responsibly, the number of people whose lives are improved with access to energy, jobs created, green jobs, and so forth. So when we talk about impact investing, this is your opportunity actually to tell the story and see where your investments are going. It's a little different when you're in sort of more of public market space, which is Beth referred to. Both Beth and Rachel talked about what I call the spectrum of capital. So if I had my map in front of me, we have traditional finance on one side and philanthropy on the other. And it's been discussed, a lot of Jewish institutions keep the traditional finance place here. We're trying to maximize return. We don't care about the harm. We're not looking at what we're trying to do. We're trying to have return so we could fund our other work. And through our philanthropy, we often end up, as Rachel, I think, alluded to, we fund the harm that we've done through our investments. And then there's everything in between that we've already discussed. Impact investing is another piece of that. Again, using your assets to help heal the world. And also in another panel, maybe next year, how inside an organization, those two sides come together and have constructive conversations about moving money. Beth shared some numbers, but real quick, just to say, it's also estimated that the U.S. impact investing market is sized at about $715 billion, which is a 40% increase over 2 years ago, and that's going to keep growing. And also because we're faith investors, and this is where the power lies. Faith investors manage approximately 10% of global investable assets. So imagine if we began to deploy our portfolios with our values, what a difference that would make. And imagine if we just did that as a Jewish community. Again, these are ways to reach deeper into vulnerable communities, to address some of the structural inequities that we're experiencing in this country and globally around race and gender, poverty and climate. And again, support the other work that you're doing as an organization, your advocacy work, your program work, your social service work, your philanthropy, again, all coming together here. So a couple quick examples from our portfolio at Calvert Impact Capital, where we actually pool investments from individuals from $20 all the way up to large institutional investors who've invested tens of millions of dollars with us. And we reinvest those funds in a global portfolio of impact investing opportunities. So I'll invite folks just to take a look at our website to get a sense of what we're talking about, and it's a great learning tool. A group like Sun Funder, which is a solar finance business, which has directly impacted lives of women and girls in particular, giving energy access to households throughout sub-Saharan Africa and Asia. A forest resiliency bond, which is an innovative investment vehicle used here in the United States in Northern California to help protect forest health, particularly in light of wildfire risk and water conservation. Sunwealth Power, which is also here in the United States. It's a developer, aggregator, and owner of small-scale commercial solar installations. They work with communities and partner on solar projects, including houses of worship. I think they may have even worked with a synagogue or two along the way. Maybe something like the Seychelles Blue Bond, which was the world's first sovereign blue bond to support this country's sustainable marine and fishery projects that we participated in. So there's a lot out there. And in fact, later this year, due to demand from investors, as well as a real need in the marketplace for capital that's flexible for impact, we'll be launching our own a new climate-oriented product as well. So stay tuned for more on that at another time. The other one I want to bring up that's really important, another sector in the United States, relatively easy to access for investment, are community development financial institutions. These are community-based and controlled loan funds, credit unions, and banks that provide capital and financial services in underserved communities throughout the states, including in Native American communities. We'll put some links in the chat, and those are amazing investment opportunities probably happening in your own backyard. I'm realizing I'm running short on time. So there are some incredible examples from the Catholic community that I was going to share. I think ones that would inspire us to pull together funds at very large levels, focusing on the environment. We can talk about those later. But just real quick, for the Jewish community, Nathan Cummings Foundation, huge leader in this field, and is actually now making a commitment to do 100% mission-aligned investing, and they have an incredible resource on their website, so let us follow in their footsteps. Jewish Funders Network is doing some great work with its members. There's a new guide that's available, and I encourage folks to check that out on their website. That's available to anybody. Beth mentioned JLens. In addition to Beth's really pioneering work, the San Francisco Jewish Community Federation and Endowment Fund has an impact investing platform for their donor-advised fund holders. That's really exciting to see and offers some real on-the-ground impact opportunities. And then the last thing maybe is the reform movement, which back in 1997 passed a resolution that all reform institutions should invest 1.8% of their investable assets in community development. And in fact, some reform institutions, including the Reform Pension Board and the URJ, still do that. So we have some great examples going on here, and we'll talk more in the chat. But bottom line, join us. This is a huge opportunity for Tikkun Olam to make a commitment to our planet and to generations after us to preserve planet and people and life. So please join us. Thank you.
Thank you, Amanda. That was really helpful and really inspiring to hear about all the opportunities and growth where that people can invest in. So we have mentioned that you can move your investments out of fossil fuel companies, and I'd love to turn to Jeff to understand the process that Friends Fiduciary undertook to ultimately make that decision.
Great, thank you, Rahel, and I'm very honored to be a part of this session today. I thought I'd share my organization's journey to excluding fossil fuels from our investments as just one example to show that it can indeed be done by a faith-based group and that it doesn't have to negatively impact investment performance. First, some organizational context about Friends Fiduciary, which is rather unique perhaps. Quakers are non-hierarchical, so there's no central authority. We seek consensus in our decision-making, and we tend to be process-oriented. And because of those two factors, we also tend to make our decisions slowly. Friends Fiduciary has an all-Quaker board, and we were formed back in 1898. Like Beth, we have a number of investors that we need to satisfy. We serve 425 Quaker institutions and faith communities across the country, and they may choose to invest in our commingled funds or choose not to. So we need to be competitive with other investment options. So like Beth's group, we have a lot of folks we need to listen to and satisfy. And further, we utilize various professional investment managers to manage our assets. Now, that being said, we have complete control over what's added into our portfolio. We have what are called separately managed accounts. We don't invest in any mutual funds, and I'll talk about why we need that control. So as faith-based investors, we at Friends Fiduciary have broad values-based screens, and those are based on our Quaker values of simplicity, peace, integrity, community, equality, and stewardship. We've always excluded producers of weapons, alcohol, tobacco, gambling operations, and for-profit prisons. And just as a data point, one of our commingled funds is an index fund based on the S&P 500. The S&P 500 is the index of the 500 largest companies in the US. So we have a custom index fund that is meant to mirror that. And based on our screens, we screen out 120 companies of those 500 based on our faith and values. In addition to those exclusionary screens or negative screens, we're also very active in the shareholder engagement area that both Beth and Rahel mentioned. Another key context piece for us that I think about daily is that you don't have to give up return to invest consistent with your values. I'm going to repeat that because it's important. You don't have to give up return to invest consistent with your values. And I usually point again to that Quaker Index Fund that I mentioned earlier. Remember, we're screening out 120 of the 500 largest companies in the US. And for the 5 years ending at the end of November of 2021, that fund's annual performance was 18.8% versus the S&P index, the full 500 companies, of 17.9. And by way of detail, more information is available on this fund, and its performance is posted on our website. But I list that so that you can see that there's actual returns that show you don't have to give up return. Our fossil fuel-free journey began in 2012 and 2013 when we started hearing from some of our faith communities asking us to stop investing in fossil fuel companies. It's important to note that at that time, because of our environmental screens, we were already underweight the energy sector. We were at about a third of the sector's 10% weight. That said, momentum built in 2013, and our board reached a consensus to begin excluding coal companies as one way of addressing those building concerns. But we did not yet have consensus on excluding oil and gas companies. Although I will note that we did begin prioritizing shareholder engagement with those oil and gas companies that we did hold back at that time. Because I want us to be able to serve all Quaker organizations, we decided to launch a fossil fuel-free option, and we called it the Quaker Green Fund back in January of 2014. This was a balanced fund. It was meant to serve as an alternative to our flagship balanced fund, but it would exclude fossil fuels. And we used the 350.org definition of fossil fuel free at that time, which was a Carbon Tracker 200 list. And in this discussion, and we may get to this in the roundtable discussion, but definitions become important here. Everyone has a different notion of what fossil fuel free is. So in addition to this new fossil fuel free exclusion for this separate fund, this new fund we set up, we added a clean tech or positive impact manager to that fund as well, kind of akin to what Amanda was talking about. However, ours was an equity manager or a stock manager. From that point forward, essentially, and that's launched in 2014, the investments in that pool grew. More Quaker communities decided to leave our flagship fund and transfer their money to this fossil fuel free option, which is part of the reason we created that, so that those funds didn't go elsewhere. Because based on our unique value set, particularly the weapons exclusion, we believe it's important to reflect the full value set, not just focus on environmental concerns. So during this time, we heard increasing concerns from a number of our investors about the desire to go fossil fuel free. In late 2019 and in early 2020, our investment committee and our board determined that there was a building consensus and it was time to begin excluding all fossil fuels from all of our portfolios. We had been interrogating that question every year since 2014, and 5 years later, essentially made the decision to indeed begin excluding fossil fuels from the portfolio. So we implemented that step in the third quarter of 2020, and we folded that old Quaker Green Fund into our flagship fund, as at that point, all of our funds were fossil fuel free. However, just as back in 2014, we wanted to be slightly ahead of where our investors were. We wanted to stay on the leading edge because we knew some of our investors, now that we had excluded fossil fuels, wanted to see more positive impact. So we launched in 2021, in January, an all-equity green impact fund. It has 3 impact managers investing in renewable energy, energy conservation, and technologies to mitigate climate change. In addition, using data and strategies from Project Drawdown and the World Resources Institute, who've done work around greenhouse gas emissions and how we move to a lower carbon future. A portion of this new impact fund includes an index component, again, based on the S&P 500, but with even more rigorous environmental screens, because we're now excluding high emitting sectors like airlines and meat producers, again, out of this separate carve out fund we have to allow investors who are very interested in that type of impact, allows them to direct dollars towards that. And again, the returns have been commensurate with the S&P 500. We don't have much track record on this fund yet. It started at the end of January of last year, but essentially we're right on top of the benchmark at 24.4%. So at the time we first launched our fossil fuel fund back in 2014, I told our staff and board that I thought ultimately our flagship fund, which at that time held fossil fuels but was underweight, would one day look more like the new green fund. And lo and behold, in 2020, it looked very much like that fossil fuel green fund. I further predict now that over time, our flagship fund will look more like this new green impact fund we just launched. Within our faith community, there's increasing concern about our future, our society's future, the world's future, and these issues and concerns aren't going away. And so I think like many groups, We continue to discern where our values are leading us. And part of our work at Friends Fiduciary is to at least stay with our faith community, if not right on the leading edge of them. So with that, that's our story at Friends Fiduciary, a Quaker organization. And now I'll turn it back to you, Rahel.
Thank you. It's been really interesting to hear all of your different strategies and approaches and the ways that you all are making different kinds of using your approaches to make an impact on on solving the climate crisis. So I actually have two questions, both first about impact. The first relates to a question I'm almost often given when I talk to Jewish institutions, whether it's small ones like synagogues or big ones like federations, is that the influence is small. That why does it matter if we move our money or if we engage with, or if we invest it somewhere, or if we, engage with a company, even if we own a small part, when it feels like if given how big some institutions are, that why should my small institution make a difference? Obviously, for me, it's the moral case. If you own a company, you have to speak up for it to do better and to make a better planet. But what would you say to all the three of you say to those questions about overall impact and influence? Why should small shareholders or institutions try to engage in these strategies?
Isn't that sort of like saying, why don't we eat pork on Tuesdays, but not on Wednesday, Thursday, Friday, Saturday, and Sunday? I mean, it is, we all, we do our part, and it goes right back to, that yours is not to complete the task, but neither are you free to desist from it, that we all have to do, our part. And that's part of the message, that I'm saying to donors when I talk to them. And I wanted to clarify really quickly, Rachel, we actually do offer an impact investment pool option. And so we're trying to educate donors and get them to choose that option. We can't force them to, and it is our smallest pool, but it is growing. And to Jeff's point, in that pool, and to your point, Rachel, we actually do exclude for-profit prisons and weapons. And the reason for that is that we feel like, or the J-Lens Investor Network excludes them, that no amount of advocacy is going to make a for-profit prison a good actor. Whereas we look at some of the energy sector and we say we need to get in there like the guys at Exxon and work for change. But my answer to your question is, I guess it is the moral case, it's the Jewish case, that each one of us has to do it. Because if we all take the argument that I don't matter, then nobody does anything and we're nowhere. And so we have to stand up. And I don't know about my other panelists, but I often feel black and blue from beating my head against a wall. But, the rock is going up the hill slowly.
Anyone else want to jump in? Amanda, it looks like you do.
Sure. Great question, but golly, isn't there that saying, to save one life is if you save the world? I mean, we all have to act. I mean, that just goes to what this conference is about. Each of us in our own lives, each of us taking responsibility as actors in institutions. There's a framework that we use with impact investing. It's, if you go from investments that contribute to harm, then it's the intention to avoid harm, to benefit stakeholders, and to contribute to solutions. So if you're confronted with that choice, and again, as Jeff used, stewards of our community's resources, why would you choose anything else? It's not easy work. None of us are saying that this is going to be an easy task. It takes years, but I don't accept that we should do nothing.
Yeah, Rahel, I would just add, I agree completely with both Amanda and Beth, and it really, I think, comes down to values. And Quakers have a value about integrity, and this really is about integrity, about being consistent across our activities. So that's part of what drives us. The other thing I would say, and that frankly gives me hope for the future, is that younger people get this. They totally get this, which is why the ESG responsible investing market is growing. Traditional investment managers who've long argued that anytime you exclude any company, you're going to take a hit on returns. those same investment companies are no longer saying that because they're trying to capitalize on this ESG market. And I think as faith-based investors, we bring a unique perspective and a different level of integrity on this ESG integration and consideration in the investment process. So.
Thank you. So I've asked you about small impact. Let's talk about big impact. What's the role that the large impact managers, investment managers and banks like BlackRock and Vanguard and JP Morgan Chase, what's the role that they play in making or breaking the market for fossil fuels? And how can Jewish and faith communities push these actors, which hold so much power right now, to make their investment strategies more aligned with values of faith communities and communities like ours?
Well, I'll kick it off. As a group that has done shareholder engagement with one of those large institutional managers. Friends Fiduciary is a member of the Interfaith Center on Corporate Responsibility, where Rahel is in leadership. And as part of an investor effort there, we co-filed a resolution with BlackRock back in 2017 to try and get them to encourage them to vote their proxies in support of reasonable and thoughtful shareholder proposals on environmental concerns. And actually, I think it was 2017, I may be off on the dates, but that was the very first time BlackRock, so we negotiated a concession with the company. They agreed to look at their proxy voting. And that year, for the first time, BlackRock supported an environmental resolution at Occidental Petroleum, which moved it into a majority vote position. So that was an instance of a small group of investors, faith-based investors, moving at that time and still today, the world's largest money manager on an issue.
Right, and we see that because of the power that they hold, when BlackRock and Vanguard and State Street vote in favor of an ESG resolution, it's more likely to pass. So I think that kind of advocacy on those large asset managers is really key right now. Amanda, it looked like you were going to jump in.
I was just going to echo. I want to say that the Interfaith Center on Corporate Responsibility, I always say, is an unsung hero of this work. And for those of you who aren't familiar with ICCR's work, get familiar. I think it's such a critical piece to the activist component as well as the investing component of what we're talking about. Frankly, there aren't very many Jewish organizations who are active at ICCR, and we need that. We need to show up because so much of this work, whether it's on the engagement side, on investing, in impact investing, and investments in creative ways, this needs to be done in collaboration. Collaboration within our own community and collaboration across faiths. And I think that this is a great example of what happens when we come together.
So I'll just add, and I hadn't thought about this before, but when BlackRock does something along these lines, like when they send out their shareholder letter or whatever every year, it gets a lot of press coverage. And so we also need to really encourage, because they also do things that are kind of greenwashing. And they get coverage for one and not so much coverage for the other. And so again, there are different ways into this to be an activist in this area. But, if we have any journalists on this call, this is ripe for transparency and communication and investigation, etc. And I think, those companies respond, their reputation really matters to them. And so when they can get called out, that is to the good.
Thank you. So a big part of what I appreciate about this panel is that all of you are practitioners of this work. You've shown us different ways that it is possible for institutions and endowments to green their investments and to make real change on a corporate level. But as for someone starting out, for institutions starting out, sometimes it feels like there's so much that could be done that it feels overwhelming. Practically, what would you say, each of you say, are the first steps that an institution can take to move their money away from fossil fuel investments to green their endowment and to engage with the companies in their portfolios?
I'll start. I think it really is, you start with education, particularly in institutions where you have an investment committee, and and a board and, you know, lots of stakeholders, you have to start by bringing people in and making, you know, sharing with them, educating them on what is possible. And Jeff's point that you can earn the returns, the market rate returns that you want and need, and still invest according to your values is really important, because a lot of people just don't believe it, but there's huge amounts of evidence to support that. You know, you can contrast that with, particularly outside of the pension world, where you can also get outsized impact with your philanthropic dollars and a below market return. And for some philanthropists, that's great, because any financial return is better than a grant. I mean, when you give a grant, it's 100% social impact, zero financial return. And so there's lots of in between. And I'll just say we started a couple of years ago, just individually offering donors just specific local impact investments in San Diego. And at first, you know, there was like, well, what is this? But now, a few years later, I have donors coming to me and saying, have you heard about this investment? Can you do the diligence on this? Because I think I want to invest for my donor advised fund. And so it's that education. Once someone sees that they can make a solid financial return and make a big difference, it is intoxicating, and they will want to do more of it. You just have to get them to take that first step.
I'll jump in, following on Beth. Yes, I mean, you have to start somewhere. We always say start somewhere, start small. In the case of impact investing, and I don't know if I got to it in my remarks, think about where you're banking. There are community development banks and credit unions and minority-owned depositories and green banks that are out there and will have some resources. Just think about where your money is sleeping at night. Someone said, are you comfortable where your money's sleeping at night? And then you can continue down this path. Other thing to think about is, you know, you'll look carefully at the kind of capital you have, your own institution's tolerance for risk, the time horizon you're dealing with, and one way to begin to do impact investing, at least, is carve out either a percentage. You know, the reform movement has talked about 1.8% high, or a dollar amount, and begin to experiment with that amount of money. In fact, that's how Calvert Impact Capital got started 25 plus years ago, to Calvert Mutual Funds. The money was set aside to do what we now call impact investing. The demand was, and the need was so strong that we're now, over $500 million institution. So begin somewhere. Don't hesitate. I also have a comment about returns, but I'll wait if we come back to that.
I think I would add from the individual perspective. So from those of you who are individuals in a faith community, I would encourage you to understand where your faith community's assets, your local synagogue, or in my case, Quaker meetings or church, where those funds are invested. Do it in a respectful way so that people like Beth and I don't go crazy. But that notion of really understanding is important. And that also opens up the opportunity for education, which is two-sided. It can be educational for someone like me to talk to our investors about the various complexities. But it's also really important for me to hear from our investors as stakeholders as well and understand building concerns. In the institutions themselves, if you're on an investment committee or board, I think that it's key to meet with your stakeholders and or investors to, again, keep your finger on the pulse of where those groups that you're supposed to be representing, where they are headed. And I think it's key to also ground your decision-making in your values. Whatever those values are, make sure that your decision-making is through a lens of those values.
Thank you, Jeff. That seems like a perfect place to close. I am so grateful to our panelists who are really leaders in this field. I have a lot, you've given us all a lot to think about, I think, and have given us some concrete steps and a great deal of inspiration that this change is possible and that the Jewish community can really make this a key strategy of the work fighting climate change. I am thankful to Dayenu for pulling together this panel. And I would like to thank you all for joining us and have a wonderful evening.